Bring in Hatem Dhiab, founding partner and managing partner at Gerber Kawasaki Wealth and Investment Management. Hatem, thanks so much for being with us. Let's get a sense of, whether Snap is an indication of, whether the tech rally could in fact snap on the back of these earnings.
Hey, good morning, Amber. Thank you for having me back. It's really tough quarter for Snap. Another one, actually. We thought they were out of the woods with having reported some profits last quarter, but I think this quarter shows that really the consumer or the digital advertising space is struggling. It's really unfortunate, but Snap is definitely going to be an indicator of what's going on, because in general, I think everyone is cautious. Digital advertising revenues will go down. So I think that's going to be telegraphed through Google's earnings, Facebook's earnings, or Meta's earnings, and so forth.
So the pushback is Alphabet, which owns Google, and Meta are different. You cut your advertising on Snap before you cut it in places like Google and Facebook, because you just can't afford to not have a presence there.
Yeah, that's a good point, but I think the whole pie is shrinking. I think every CEO we're talking to right now is being cautious about the future. Everyone's talking about recession, about things getting tougher. The consumer is really doesn't have as much money to spend. So as a result, I think you're going to see digital advertising budgets in general go down. So they will hurt both Alphabet and Meta.
Meta is so interesting because you could be very tempted to be lured in by the valuation, even with a huge rally. Just looking at it now, from the lows of November, it's up 70%. Even that, it's only trading at 14 times current earnings. It doesn't sound like it tempts you, though.
We have to look at, PE ratios within the actual company and its growth rates, right? With Meta, I think Meta is having structural issues. They are, not only their business is challenged in general, but also they're trying to really build this metaverse. They're spending a lot of money into this kind of really changing the DNA of the company. I'm not a big believer that's going to happen, although we believe in the metaverse in the larger theme, but I think Meta is just not going to succeed. So as a result, I don't think investors are convinced that Zuckerberg is going to make it happen.
Alphabet is an interesting company. For so long, their motto has been, we're an AI company first. And it just seems like in the past, month or two, people are like, yeah, we really want that. And AI stocks have really taken off. Do you see kind of a push and pull between the fundamental weakness that you see emerging in advertising, and maybe it could catch a ride on the AI Express?
AI Express, I love that. I'd say Alphabet is down but not out. Just remember, Google actually created AI. I think Chat GPT is really kind of has changed, or it's been like the biggest conversation in tech the last 2 or 3 months. And I suspect that Alphabet has an answer. It's just they haven't really shown us what's going on. So I think this week on their earnings call, I bet you there's going to be a lot of calls about what they're doing in that space, what's happening. But I would not count the Alphabet out. It's
interesting because obviously they won the search engine game, they won the browser game, and then all of a sudden there's Microsoft that's really closely aligning to Chat GPT. And I wonder if we're going to be sitting in a year or two saying, remember when we used to use Chrome, or remember when we used to Google things, because now we just Bing things.
Yeah, I know, it's funny. Are we going to start binging things? Listen, it's a legit concern, right? Even if 10 or 15% of search goes away from Google to Bing, that's a big hit to Google's number. So I think what we want to see is what's the answer that Alphabet has, and I suspect that Alphabet has some really good tools in there, and they will release them. So we like what Microsoft has done. That's a really good move from them. But again, Alphabet is not someone to be threatened by these things, I think.
I'm most curious about Apple because there's been so much concern, fear about what is their ability to deliver iPhones in the face of supply chain constraints. What is demand like in places like China? This is going to be very revealing quarter as to who was right, the bulls or the bears. Who do you think is going to be right?
I think of my iPhone as a consumer staple at this point. Apple has shown us that they can keep executing amid some really tough macro elements. Now, last quarter was probably one of the toughest one because China was basically locked up. And we saw that in the numbers. I think we're going to continue to see that in this number. So this may be a really soft quarter for Apple. However, their guidance, I think, is going to be a little bit more positive because China is opening, and that's a big catalyst for the whole globe, really. So, you know, Tim Cook has been really performing really well amid some really tough macros, but yet, you know, the next 2 or 3 quarters are going to be good, I think.
What's your highest conviction tech name right now?
I'm going to have to go back to Tesla and Netflix. I'll speak about each one separately, but Tesla is execution, and also it's just the sector is fantastic. You know, there's a huge adoption in EVs, and Tesla is really the leader in the space, and they've been doing so good. And last quarter kind of showed us that. And then Netflix the same way. You know, Netflix has pivoted several times, and you know, even though there is a lot of competition in the space, this new ad tier is going to be fantastic for them from a revenue standpoint. And I think people are yearning for awesome content, and Netflix seems to be delivering on that every quarter.